Hey everyone, I'm back. Thank you, Gabriel, for the announcement. We're going to talk about investment. We covered this a little bit yesterday in the overall death of an ICO panel. I'm going to talk to Bonnie afterwards about more happening in Silicon Valley and Asia. Well, for those of you who haven't been here yesterday, we can introduce ourselves probably again. We're going to talk, as Gabriel said, about investments, but more in a traditional way. How does VC money fit into the overall blockchain and crypto space, but also how accelerators work, how incubators work, government programs, corporate programs, and so on and so forth. Bonnie, shall we start with you?
Sure. Hey everyone, I'm Bonnie with 500 Startups. For those of you who are not familiar with us, 500 Startups is first and foremost a global seed stage venture capital investor. We are lucky enough to have now over 2,000 companies in our portfolio. And we also have an amazing team here in Thailand, our venture partners, Krating and Mu, who's been helping us making investments since the time, I believe, the first year they told us when they first came in was the total venture capital raised in Thailand at the time was 2 million. That's across all companies.
2 billion, right?
2 million. And 1 million was raised by Mu's previous company.
Yes. Okay.
So in terms of blockchain, from my role, I'm based out of Hong Kong and also straddling between Hong Kong and San Francisco, mostly looking at all blockchain investments for 500 startups. And we have been investing in the space since 2014 with companies such as Chain.com, BlockCypher, et cetera. And more recently, we are also investing in tokens as well as equity.
Thank you. Moafaq, you again?
Hello. I was here on the panel yesterday, so I'll keep it short. So I'm Moafaq. I'm a serial entrepreneur, angel investor, and a VC. I was a VC, not really active anymore. I've been an entrepreneur all my life, and that's what I'm doing currently, also when working with lots of early stage companies. I'm an investor in 70 companies through a couple of different vehicles, ranging from business to business, so B2B software to gaming, a little bit of hardware, and some clean tech.
Interesting. Roland, Cocoon, Hong Kong.
Thank you. My name is Roland. I'm one of the managing partners of a seed venture capital fund called Cocooning Net Ventures. We are actually working, the fund itself is situated inside an incubator in Hong Kong called Cocoon, hence we franchise our name as part of our fund. And we're also a supporting partner of an accelerator, also based out of Hong Kong called Betatron. So across the board you have myself in the traditional VC space. We're associated with an incubator, and there's also an accelerator portion. And just to give a bit of context to what we'll be discussing later, a lot of our limited partners in the fund are family offices who are running traditional businesses across Asia, traditional conglomerate businesses. And so our approach and take towards this new technology, blockchain and tokenization of assets or otherwise, really comes from an operator perspective. So we're responding to these new technologies and trying to figure out how they can fit into existing legacy businesses. So I'll be coming up about it from that perspective. Thank you.
Wow. Okay, probably I'm only Thai here.
Yeah. Well, the last panel was all Thai. So
okay, cool.
I was the only non-Thai then.
Anyway, actually, I'm Meng. My name is Meng. I'm heading dtac Accelerator. Our accelerator house is the #1 accelerator house in Thailand. We already invested 46 companies under our portfolio, and 50% of 500 startups came from us, which is good. And 70% of startups secure follow-on funding. If you want to follow on the next pre-A or A round, please welcome. And so far that our startup is growing like 500% each year on the average of the valuation and stuff. And talking about the blockchain, and recently, just a couple months ago, we just recently invest in one of the company focusing on the blockchains called BitCup. And within 8 months, like after operate, they already reached 3 billion traction, and now became like #2 exchange on a tokenized in Thailand.
Mm-hmm.
Yep.
And Bonnie mentioned originally Thailand and venture capital here, and you probably can you give us a fair assessment of overall venture capital and investment and maybe startup ecosystem in Thailand, and then obviously also the overall blockchain and crypto thing?
Okay.
How do you-
It's really fair enough that Thai startup ecosystem is pretty new. And it just happened like Sin Mu is found his company like last 4 or 5 years ago, and at that time it's like only 2 million that as you said, and now we already reached like more than 200 to 300 million investment a year. So it's evolving, but it's still new and it's still young. And compared to Indonesia, our big brother, or even in Singapore, or even in Hong Kong, and what we can see is a lot of companies already adopt those like blockchain technology is coming this recent year. And why I'm saying this because like to be honest, I personally don't know anything about the blockchain previously. I just know it because most of the startups who apply us, they said that, oh, they use the blockchain technology for medtech.
And AI.
And AI. It's buzzword, right? Every VC know that oh, I need to put the AI word in the pitch deck and stuff. But after a year, it's like, oh, any team put that, I will set aside first and then we'll read the But anyway, come back to the core technology of that. Some of them, like medtech, like or even like the other, like even the big corporate that like banking in Thailand, and they try to adopt the blockchain. But what I see is only B2B right now. To be fair, the B2C adoption rate is still far away, if you ask me personally. But B2B, like banking, like big corporate using for the LC, or even though for the limited as a bank and stuff, it's already picking up quite a lot. Yeah.
Thank you. I don't know, we're all investors. I don't know who asked first about investment advice. Maybe Bonnie, like coming from like Silicon Valley, 500 startups, but you're spend a lot of time in Hong Kong and Asia and stuff like this. How do you see this place, Asia generally, and Thailand and Southeast Asia involving? I know 500 Startup has a fund in 500 Durians in Singapore, so you're obviously very active in the space as well.
I think for us, after all the craziness and hype, right, everything comes back to the basics. And if we look at a lot of our blockchain investments, if you are building a blockchain project, the time of just crazy money is over. Right now, if you need to pitch to any of the investors who are savvy in investing in the space, is number one is you have to be very clear about what are you using the blockchain for, and be able to explain if you are still going to raise it via a token, what is the purpose of the token, and whether you are considering going through a regulatory route, STOs, or are you going to stick with utilities? Gone are the days where I used to remember there were a lot of projects that would come in where essentially the whole deck just says, we're going to solve supply chain. And I said, okay, what about supply chain that you're going to solve, right? Now, everything is truly amazing in this space is that it moves at crypto speed. So 1 year later, now we're seeing projects where they are so pinpointing down to specific steps in trade financing, where they would tell us, let's say a recent project we looked at is actually in our incubator. They're also ex-Cisco team. They're building a supply chain innovation project for trade financing, specifically targeting the origination of invoicing. And then on top of that, they were able to articulate very clearly, after the invoicing part is in digital form, then blockchain makes sense for the immutability and the persistent recording. Because as much as we love blockchain, it's garbage in, garbage out. The first record onto the chain, if it's not correct or if there's no way to prove it's correct, the blockchain doesn't help you verify it. So this is kind of an example of what we're seeing in terms of the growth of companies, in terms of the caliber of companies coming in when they talk to us about being a blockchain company.
Novak, you were on the skeptic team yesterday for crypto.
Roland.
But to Bonnie's point, the blockchain technology investments, you're based in Europe. You mostly, I would assume most of your portfolios are in Europe?
Yeah, a bit of US,
yeah,
but mostly Europe.
How much I'm sure you get pitched a lot of blockchain and AI probably projects, but let's see on the blockchain parts, how do you see that space in terms of a, let's say, investment ecosystem? How big is it? Or
I mean, in Europe, it's very much focused, I think, in Switzerland. there seems to be, or at least many of the projects, wherever they originate from, they end up being in Zug or somewhere in Switzerland.
Malta, Gibraltar, all those
Yeah,
places,
but somehow I see a lot of stuff happening in Zug. But I think what's happened is it's maturing fast. I don't know which evolutionary cycle we are at now, but certainly it's growing up quickly in the sense that what was possible some years ago is not longer possible because people are actually focusing on what's the real value of this, not just slapping these buzzwords into the deck, but actually proving that there's a real problem that you're solving and you have a credible team who is trying to solve it with a meaningful way. I think that's interesting to see that, but still, I think it's very, very early days. It's like, I think I said yesterday, internet like the late 90s, not even the dot-com boom yet. Like 97, perhaps.
Maybe 98 now, considering the prices.
Yeah, maybe. But yeah, I mean,
we're approaching 99.
I think we're going to see something really cool in 5 years or 10 years from now. But and I know that everyone is very impatient. Everyone wants to see everything happening now or yesterday. But I think the really interesting stuff is going to happen when it becomes mainstream, and I mean mainstream as in globally mainstream.
Roland,
Yep.
should blockchain projects and crypto startups, no matter what they do, whether it's a supply chain or stablecoin or something, should they, and let's disregard ICOs, perhaps, should they have a different relationship with venture capital or investment money in their company as opposed to a traditional startup doing enterprise software for hospitals?
My short answer is no. What we talked about yesterday, I had the pleasure of debating with some panelists here with Mofak about ICOs and the death of ICOs and what that all means. The answer is no, because at the end of the day, the mission that we're all trying to do here, whether you're trying to raise some dry powder, some capital to fund your project, which may be blockchain-based or token-based, or you want to engage a venture capitalist who's providing both expertise and money to grow the project, it's the same mission. It's just the way in which we are powering these projects and who we're engaging that's slightly differing. But at the end of the day, we're still talking about fundamental businesses, the assumptions of which have not drastically changed. What the blockchain piece does is it changes maybe on the financial side to make things more efficient. You start having more assumptions around security that may have a cost implication. But overall, the overall picture for businesses hasn't fundamentally changed just yet. So the approach of building new businesses that require both capital expertise remains the same. So the question is whether if you want to conduct your financing, so your raises via an ICO or an STO or otherwise, that's just the methodology in which you're trying to achieve the same goal, which is get some money into the company so you can go and build whatever you got to build. And a VC, depending on their size, can also do that. It becomes actually a question more rather of efficiency for you as founders or team members in the company. What's the cheapest, fastest, most legal way of raising that capital so you can just get on with it quick? The birth of the ICO came about, understandably so, because it is difficult dealing with venture capitalists. When we are gatekeepers to our investors, to projects, and therefore the requirements, will certainly be higher to get our capital. To then think that, well, if I can just get the same capital via an ICO because I can just write a white paper, we're talking about, of course, a year and a half ago, and try and circumvent that difficulty and that time so people can give you money. As we can see, that was just a pure temporal solution. That was just, fraud. That was a bit of, bullshitting around, at least 80% of it. I'm not calling out everyone. So now where we are now is we're back to some sensibility, which I think is fantastic. We are hearing a lot more about much better projects, people being much more specific about why they're raising the capital. In some ways, when talking about the pure blockchain side, we're going back to the VC approach where we're raising the standards once again. Okay, we're still maybe raising from a larger group, a larger syndicate, a crowd, but as an overall crowd, the mentality is raising those standards. So that's positive. But that, that doesn't separate the traditional VCs from the new age of financing. We're all actually starting to approach this convergence where we're demanding that more transparency and that higher quality.
There you go. We have fans. Do you even in the ICO white paper brings money boom? Did you invest in any of the blockchain projects as a VC at the time?
I did not, and not because of a particular view towards ICOs. It's just the nature of my fund and how we operate. We are mostly family office backed. A lot of these are Asian family offices. So we just took, it is traditional, it is boring. So what we do is, because we are blessed with true vertical expertise across segments across these businesses, from airlines to hotels, to insurance, to retail, we just simply go in and, go back to what's the problem, that you're trying to solve here? How big of a problem is it? If you as an insurance company or as an airline represent X amount of your market, how do you improve on that? These are very basic questions. And then kind of towards the end, you kind of go, will blockchain help? Will these features of technology improve certain parts of your business? Will it disrupt everything? So that's the approach we take. And so far, as we've heard, at least when we're asking those questions last year and late 2016, the technology wasn't there to answer those problem statements yet. But we're slowly seeing that as we're hearing. It's getting there. So it's a matter of time.
That means you will in the future, though, right?
Yes, we've already invested, just for disclosure, we've already invested into a security tokens exchange.
Okay.
So that's our first step in to say, all right, and we can talk about reasons why that. Yeah.
Basically, the same question from the first question to Roland. Should the relationship be the same with VCs and crypto projects, from your opinion?
For us, very easy. We are as an accelerator, we accept the company that can solve the problem for at least like 1 million people. No matter what technology they use. They can use the blockchain, they can use the old-fashioned, they can use just only like coding, website, mobile, whatever that it is. But is it happen that blockchain can help them, can make it, like Roland said, faster, cheaper, and better? Why not, right? So, but in order to understand those exactly, so what we do is we take another step that, okay, if I want to understand blockchain more, we need to invest in the blockchain ecosystem. So we luckily to meet the guy that I mentioned, that BitCup, the company that doing this blockchain ecosystem stuff. Sorry. So we invest in them. No matter, actually at that time we still not sure what it is. And after 8 months later, 3 billion traction, and SEC already approved them as one of the 5 companies that they got approved in Thailand.
They do something.
Yeah, they do something right. So after a while, when we have this portfolio, when we get closer to them, we also learn from them. What are they doing? Why they're creating this, they call it is the Exchange 2.0. It's like separate from the normal SEC stock exchange. This one is a tokenized exchange 2.0. So, okay, we understand, what tokenized do? You also operate in this? We try to understand bit by bit, part by part. That is how our accelerator is doing now. But again, it's also solve the problem that people don't have any exchange to trade and stuff like that. It creates the impact more than 1 million people. And after that, when you come back to take a look for the next year batch, they already, some of the startups already contact me. They even specific piece by piece, like how can they use the blockchain technology to solve the problem of the medical tourism things, or even some accounting process and stuff like that. It's not just only the buzzwords, I use a blockchain, but I don't know use it for what, like Bonnie said, right? Now they new pin down that what process that they use the blockchain. This is what we are looking for, and that, I understand already. So for me, with the startup, it's still the same. Like Ronan said, it's only the fundamental, what are they going to solve the problem, is that create impact, what is the business model. The technology part is different. If they use blockchain and getting faster, cheaper, why not? If they don't use it, but they can still solve million people problem and million people pay for it, why not? Yeah.
Right. And still on the topic of VC in the blockchain space, Bonnie, I know 500 Startup as probably one of the most famous brands, I would say, in VC and accelerators, definitely. You guys did change something with how you started investing directly, and not just you. I mean, Andreessen raised a $300 million crypto fund recently with Katie Hahn leading and so on. So you did change your relationship with crypto startups, and then now you're investing directly into, obviously with some safeguards probably. How did you come about that?
I think actually one thing to demystify, right? You look at a lot of the blockchain companies. Actually, most of the early venture capital firms came in quite early, 2013, 2014. If you look at Chain.com, where we invested in, it was Union Square Ventures, all the traditional guys are in. If you look at Coinbase, right, it's Andreessen. It's same thing, the same set of traditional guys in the equity side. So I think the only part we are starting to learn, and it was a very big lesson for VCs, right? We actually learned a lot from our involvement to look at the token side. And one thing I want to say is that we actually realize the upside for VCs when we have liquidity. Because for a very long time, I think at the same time while entrepreneurs are realizing, hey, I can just post my code on GitHub and raise 20, 40, $60 million. At the same time, we were learning that, hey, the beauty of having liquidity earlier on, because what does that mean? In the traditional world, I think all of you guys listen to a lot of VCs talk about, hey, how investing in a company, doing due diligence, and finally making that decision is almost like marrying someone, because we are with you for 5 to 10 years. Now, all of a sudden, with liquidity, I realize I can date around a lot more.
Oh,
and,
okay.
Because every time, when a token goes to an exchange, you have to realize that all your investors now have an option to cash out. And what makes that decision depends on our observation of the team, right? Used to be our only options were, I put down one check, maybe 12 months later, I have an option saying, do I double down? Or if I don't see traction, then I may not double down, but I can't pull out my check. Think about what the utility token market has provided us with. We're learning to say, hey, all of a sudden, 6 months down the road, if I see the team always posting on Facebook like their holiday pictures, the moment you go,
And Lamborghinis.
ICO, you may not know, but we may be out already. And the next time you try to call us and ask for introductions, and you wonder why no one's answering your call, I think now you know why. So I think it's very much a double-edged sword, right? At one point, yes, it's a lot faster for you to raise the money. But second, you also have to think about long term. Who are you going to rely on to help you build and continuously grow that company? And how can you keep the investors in? Because I think in that sense, actually, the team has more responsibility and more pressure. Because now, all of a sudden, your investors, every 6 months or so, can reevaluate in a liquid market.
Interesting paradigm shift here a little bit. I think that
Yeah.
that gives more power to the VCs overall. Roland, you wanna
Yeah,
jump
and
in?
to add to what what's been discussed across this panel, another approach that I think about always is, where is this demand coming from for ICOs, which yesterday we talked a bit about it being a cover for IPOs, and the view that I take is essentially it's the urge for anyone to participate in the economy. I mean, this is what this is about. And we have to look at it from a country-to-country perspective. I mean, we're very lucky that we're sitting here in Thailand, and there are other parts of the world where it's an open, free economy, so we all have a chance to participate in what's growing. I mean, that is actually the whole point of public security markets, so that the wealth doesn't just get concentrated to the top of the company. But even with that said, though, again, there's no divide with VCs and ICOs, because VC's job is to help our investors participate in the economy. And we do that by identifying the good contributors to the economy, i.e. unicorns, all right? That's what we do. ICOs, everyone is trying to find those unicorns and participate, whether in a utility way or in a money-making way. So again, the mission is the same. So again, with the idea that we are just all trying to be a part of this growing economy, the participants in the economy matter very much. Any one of here probably does not want to be, part of a company or have faith in a company where the majority of the controlling people are inexperienced, unchallenged, untested individuals. You still want to have, or at least I would want to have some great gray hair experience, some advice, some adults running these companies. So the point I'm making here is the mixture of who is participating in that company matters very much. And therefore, in that sense, it's not a split between whether VCs are participating or just general public are participating in the ICO. You have to have a mix, just like the way you look at any other company today in existence. Who's controlling it? What's their experience? What have they done? And who are the supporting shareholders or token holders that want to be part of that journey of building this dream that will contribute to the economy?
Seems you're pretty agnostic about investment vehicle, but more focusing on decision-making process and the DD part of it, right?
Yeah, and what it all means for us. I mean, earlier in the panel we talked about taxation. You know, taxation is extremely important because, you know, what technology has brought us today, so we're 10 years on, is a very big divide, inequality divide. Tech companies nowadays is a new banks. Banks showed us the capitalistic system with concentration of money in the very top. We didn't like that. Financial crisis came. Boom, Bitcoin came out. Blockchain came out and said, look, we have to decentralize this. Why? Because it's unfair to the majority of people that we didn't get to participate, whereas the guys at Goldman Sachs made a ton of money. Well, the guys at Google and Facebook now are also making a ton of money, and we're
Wait,
happy
what?
about that. So you know, yes, it's a knee-jerk reaction to a lot of stuff we're seeing here, and we're all saying, like, look, let's decentralize this a bit so it's a bit more fair. But even with that spirit, which I completely agree with, and I think a lot of us support, the kind of, if I may, that VC level of standardization, you know, making sure that, you know, in allowing for wider participation, we have to make sure we're participating in the right kind of things. That's what we're saying here, as opposed to just generally giving access to everyone for anything.
Back to the relationship with VCs and how they interact with startups, and actually to Bonnie's point, I think where you said actually now weirdly you're in a relationship where you can actually interact with portfolio companies in a more direct, ruthless way if necessary, and maybe more fuck. And I mean, it's actually a question for everyone. Did the VCs maybe get lazy? We know the VCs are not all-knowing. We know the VCs make mistakes. They all have these big brands. You know, everyone, if you have Sequoia and Andreessen and companies like this invested in you, you struck gold because everyone, you know, opens doors for you. But I'm sure those people make mistakes as well, and especially the echo chamber in a bubble like Silicon Valley, where it's very easy to get very self-aware of your power pretty quickly. Did maybe this ICOs, and back to Roland's point, did maybe give an opportunity to rethink, even on a philosophical level, how you interact with money and taking this power away from VCs, the decision-making power that you talk about?
I don't understand this paranoia of control or losing control or who has control. I think that the most important thing with investing in companies, if I invest in a company, for instance, is having aligned interests. I'm not going to make money if the founders don't make money. And the whole point is the investor should have a small share in the company, not the majority. We're not supposed to be on the driver's seat. I said this yesterday already, I'm repeating myself. You should not be afraid of VC being on the driver's seat. Then you have the wrong investor. It's really having a map reader or someone in the back seat who can help you because they've probably been on that same kind of journey over and over and over. I think best VCs, best investors are people who have done it. So entrepreneurs by background. I'd say those people typically have this, what I would call entrepreneur or founder empathy. They actually know what it feels like to run out of money or hit a wall, or when a competitor comes to the market or your co-founder leaves or things like this. And that's something that you probably don't get in a crowdfunding scenario. Mm-hmm. And I think it's not just about the control, it's not just about how much money you raise. I think money it's a necessary fuel to run your business, but that's only one part of the whole funding equation. And let's not forget the best money comes from your customers, whether it's consumer or company. They are paying for you when you solve problems for them. And that's often forgotten.
So I guess back to your point, I guess CVCs then are not really good VCs because they didn't go to the entrepreneurial. I mean, I agree with that point.
No, I
must say,
mean,
yeah.
there are dumb VCs, there are dumb angel investors, and there are dumb crypto investors. But there are also smart people in all these categories. You just need to find out who the right people are to work with.
And I think part of the question is also like, how do you be the smartest founders? So a lot of the times it's about your control, who you bring in as your investors. The best founders we have is, as Mo mentioned, they don't ask us on an operational level what should they do next, but they leverage us in a very skillful way, meaning every time they have sort of an inkling of where they need to go, they go and tap all their investors and ask us, hey, what do you think of this? And then after collecting information from 10 different investors coming from different backgrounds, like some were ex-entrepreneurs, some were ex-enterprise guys, some were ex-finance guys, they come to then make their own decision. Those are the best founders we love. And I do agree a lot of times, sometimes the questions they ask is a little bit interesting, is that we're often, I feel like, the shrink for a lot of the founders. Like most recently, we had a blockchain project where they had to fire the co-founder. And it was a very psychologically impactful, journey for this tech guy whose only mission, he only wants to code. He doesn't want to deal with any of the human issues. I think that's what we see a lot of the early projects. They're so tech-oriented, and they were able to raise so much. But at the same time, they're starting to realize that growing a company does require still some human action. And the emotion part can be sometimes challenging and taxing. So a lot of different ways, we do claim, us VCs add value, but I think it's for you to really figure out when you talk to us, while you're pitching us at the same time, we're getting evaluated too in terms of what help you need, 3 steps down the road. That's the job of you as a CEO and as a founder, is be able to see 2 or 3 steps ahead.
Okay, and the title is VCs, Accelerators, and Incubators. I want to shift briefly to accelerators here as well. And Roland and Meng, I'm sure you guys interact with accelerators a lot. Do they work, and are they applicable in the same way to the crypto world, to blockchain? I know your answer already, by the way, but the second answer, I don't know about your first answer. And what is your opinion on overall? Who wants to?
Actually, okay, put it this way. For me personally, or especially in Thailand, I don't see any significant of those startups who use either the crypto, blockchain, or whatever it is.
Sorry, are there accelerators that? What about accelerators, and do they access accelerators in Thailand?
Yeah,
those kind of startups.
Actually, for myself, I'm the accelerator, right? And the startup who participate in us, we have 600 application apply each year, and we select only 10, 12 team per year. And of course, most of them they access to our networks. But again, because this panel is talking about the team that are using this blockchain technology and stuff, and again, those startups who really use this kind of technologies, they need to see which accelerator they can provide them the value added to the company. If they are looking at us as an accelerator, you need to have some kind of technology that I can leverage on it, probably they will not choosing us as an accelerator. But if they come to us, they already have their own technology, but they want something else from us. For example, growth hacking, scaling to another country. We operate in 13 markets. So if they want those kind of things, they can leverage us. I like what Bonnie said a lot. It happens all the time to all of us here. As we work like a shrink. A lot of founders come to discuss with us what to do and blah blah blah. But back to the very fundamental question that in order when you're going to apply to accelerator or even a pitch to the VC, you need to take a look at what value added that we as a VC, as an accelerator can add value on to you guys. And for me, and again, as I mentioned earlier, that for the past last year alone, I saw a lot of companies that apply us is talking a lot of blockchain activity things, but only few of them really knew down what exactly that they want to do about the blockchain and what exactly that they want to leverage us. That is the key. Yeah.
Interesting. Maybe the point, maybe Bonnie as well, because you, 500 startups, you are maybe batch 22,
24 now.
24 of batches and then multiple locations and so on. So you obviously have a lot of experience as an accelerator as well. And I take it that you have some blockchain-related startups as well in there. Is the requirements that running an expertise you have to have an accelerator different from those startups? I would assume legal, legal advice, taxation we heard before. Did you have to change something in the operations of the accelerator? Just by taking
some things we have to change was, to be fair, right? For a while, I think when we were running probably the last 2 batches, not a lot of blockchain well, we didn't do a track then, because what we were seeing was it was the height of the market, and all of a sudden it seems like the only help companies want is, can you write my white paper? And we said, no, we don't do financial advisory, we don't write your white paper for you. But it's amazing how quickly things are already changing, right? This batch, we actually has a 3rd track of blockchain companies. And some of them, we actually invested in the token already. And we said, normally when we did the direct investment early on, you don't need to come to the accelerator. The accelerator was one of the major paths where when you come in, it's because you wanted us to invest. But their feedback to us is, I don't care, I just want to be in the accelerator. Can we pay you whatever we need to pay? Because for some of you who don't know, if you don't run an accelerator, don't run it. It's a hell shitload of work.
Exactly.
that was
Exactly.
we're getting
Okay.
If we are not doing it because we are hoping that the companies that came in, we invested directly and they're going to give us like 100x, 500x returns, we'll never do it. Because every batch, we run through a gazillion hours of like nonstop back-to-back interviewing, pulling mentors from across the world to make sure that everybody gets, all the resources they need, whether it's B2C to B2B. So for this current batch, right, we see a lot of demand is actually in the 2B sector. Most of our blockchain companies are relying on us and the network to look at, hey, we want to come in, we want to learn how to tap into businesses. Because one of the things, if you look at it, is from a tech side, it is still quite nascent. So most of the teams are extremely heavy on the tech side, a lot of PhD founders, et cetera. But what that means is on the flip side, not many of them have industry knowledge of how do you do enterprise sales, right? How do you approach enterprises? What do you talk to them about? How do you start the sales cycle? So we're getting actually a lot of requests from that angle. And that's what I've been doing a lot, actually helping the projects here in Asia, is going to Taiwan, talking to supply chain industry, talking to the banking side, being in Hong Kong, talking to the treasury management side to figure out how to alleviate the pain of thinking about their reserves shrinking, right? So a lot of these things we see is actually maybe a slightly different flavor, but a lot of it is just back to basics of what we try to do as a VC and try to fight for your allocation, right? Is we have to prove to you that we are helping you in the areas you need the most help in. And right now we see it as back to the basics of saying they need to know how to sell into enterprises because adoption, as a lot of you guys mentioned earlier, right? To see is still too early. If you look at the status of the technology, whether it's scalability or whether it's privacy, we're not there yet to apply to the 2C market. Because as much as we love blockchain, all of us sitting here, consumers don't give a shit about whether it's blockchain or not blockchain. They just want something better than what they have today. They don't care if the app is a blockchain version of Uber.
Exactly.
They just care whether it gets the car there faster or it gets it there cheaper. So
basically get an investor that's going to work really, really hard for you. That's what you're saying.
Exactly.
I think the key point is accelerated learning. Mm-hmm. Whether it's accelerators, angels, VCs, whoever provides that for you, but people who have kind of made a lot of mistakes or seen a lot of mistakes being made, they can help you avoid those mistakes. You can then invent or find out new mistakes to make.
It's a form of growth hacking, basically.
In a way, yeah. I mean, a company is a product that you can growth hack. And if you have experience in that type of growth hacking, you can accelerate your process, project, or venture company, whatever you want to call it. It's just getting quicker to revenues, quicker to real business.
Roland, same. point?
So if we had this question last year or even 2 years ago, incubation was the way if we were looking at blockchain projects, because to me, incubation de-risks capital better. I mean, from an investor point of view, we're putting some money in early on, or you're looking to the incubator who puts some money early on and using a bit more time to de-risk what that money means. So, usually incubation to me is something that's not as closely defined as 3, 4, 6 months, and there's a bit more time and leeway for companies to go figure it out. Today, with focus programs or even accelerators, well-known ones that are getting into a project, I think there's a lot of credibility coming out of that, because now I think in 3 to 4 months or 6 months, you are able to get the accelerator learning, because we're now at that, to that stage where the experience of a lot of teams can actually build stuff on mistakes and lessons learned previously. So going forward, I think over the next couple of years, it will be the time for these blockchain accelerators. I think they'll produce some great stuff. It was not so 2 years ago. That was more incubation side. So it should be pretty exciting for us, for our deal flows.
And as an accelerator, we see like how, and in Thailand, how hard is it for you to, or easy for you to raise money yourself?
Just for a normal startup, not the blockchain startup, seed round is really easy right now. Back to 5 years ago, just 1 or 2 companies just can raise like 2 million. But now today they already cross over, like I told you, like few hundred millions already a year. Seed is quite easy. Pre-A is okay, but from Pre-A to A and A to B is really hard. Because like
more money.
That's a different part. I think VC also evolve themselves a lot. They quite like probably got a painful from previously, and when they invest, and now they're more cautious. When they take a look at the Series A stage, probably they use the same technique when they invest in Series B to take a look on the Series A. So the company on the Series A stage, they need to have like more, I would say more better P&L than previously. Better in terms of like a product, not product market, better in terms of like growth rate that previously probably back 5 years ago, if you show like 20% year-on-year growth on the Series A's, and you're about to have the positive P&L on the Series A, you got invested. But nowadays it's not. You need to show like consecutive, like 12 months, 20% year month-on-month growth, and you should have positive P&L for a couple of months, like after a while, that Series A that VC we invested in. So to my point is like, seed for me is still easy. Like for example, like a startup that gone through a program, like 70% they can secure funding. But for the Series A and B, probably is very hard. It's very hard.
Yeah.
Is very briefly, is Hong Kong different to it?
Hong Kong's full of money. I'll just say that.
Go to Hong Kong.
Just to give you some numbers.
Yeah, it's a lot of money flowing around.
It's a lot of money. The flow, so the current AUM, asset under management across all registered asset managers in Hong Kong is standing at above $1 trillion right now, as of now. It's rich. So come by and chat with us.
In Southeast Asia, 18 billion US dollar.
18 billion.
Yes, but the thing is like, we cannot find a good startup to invest in, okay?
Yeah.
It's the money is already there, but the good, like, we want to put 20 million in, but we don't have the 20 million type of a company that to invest.
Fair enough.
That's the thing.
At $1 trillion AUM, I promise you there's enough dumb money there to hopefully solve some of that funding gap.
Okay, cool. Put it more in Thailand, okay?
And I think we might send some of the Silicon Valley ones over too, because same thing, A and B in the Valley has been getting tougher. Benchmarks are a lot higher. A couple of years ago, we used to see ARRs of maybe $1 million annual recurring revenue is good enough for Series A. Now we're talking about 2.
Yeah.
So the reason is not so much as a shortage of money, but the monies are getting concentrated because people are a little bit more risk averse. And we're seeing like bigger and bigger deal sizes and a bunch of all investors sort of funneling into the same deals at later stages. So yeah, the A and B, it sounds like it's not just here. I think now it looks like a global issue.
People are getting ready, maybe. So we don't know. We didn't make any predictions. We're out of time already, but maybe we can, I'm sure there's a lot of startups, projects, crypto, non-crypto in the room. I assume mostly crypto. Does anyone have any questions for our I mean, this is your unique chance to talk to investors. We have a couple of questions there. Hey, Derek, again. Yes, please.
Yes. One of the recent trends on the crypto market is that digital exchanges expand their ecosystems, and they create their own incubators and accelerators. Like Binance has their own Binance Labs. My question is, do you speak to digital exchanges, and do you view them, their incubators, as a source of investment ideas? Because the culture of VC investment is co-investment, right? So do you talk to digital exchanges? Do you view them as a source of potential deals for you guys?
Anyone?
Well, for us, for sure. We share deals and we look at,
Do you have any cases already in your portfolios where when you co-invested with digital exchanges?
We have a company called Seller Networks where that was a shared deal source. So for sure, we share deal sources with a lot of these
Was that
ventures.
with Binance?
Let her finish, okay?
No,
Well,
was that with Binance?
Let her finish the answer, okay?
Sure, sure.
I think number one is there are more exchanges than just Binance, and every single one of them are running their own venture funds. And the ecosystem is starting to look very much like the traditional venture capital side, where we also share deal flows. I mean, I think amongst a lot of us, right? We've co-invested with dtac a lot, and it's nothing different. So I think if your project, as long as you get to one investor and is an investor with a good network, you get a lot of warm introductions.
Are you satisfied with the answer? Someone else? One more? Two more? Oh. Yeah.
I have two questions.
Can you just say which your affiliation
I live in
and?
South Korea, so retail investors in South Korea have a very strong FOMO, fears of missing out. So airdrops, meetups are full of people. We have basically 6, 7 meetups about blockchain events every night.
Oh, where is that, sorry?
In Seoul, Korea,
In Seoul,
South
okay.
Korea.
Yeah, the Beyond Blocks in Seoul was insane in July.
My first question is, isn't the same thing happening to VCs? Because CryptoKitties is one of the projects I saw in Korea. They are not running an ICO. They're just making genetic algorithm to make specific collectible, non-fungible kitties. So it's just small cards, sort of, digital cards. And they received $30 million investment through 20 VCs this year only, not with ICO, equity funding, I think. So is there sort of a FOMO effect among VCs where they're focusing only where everybody else goes and not trying to find their own way? And the second thing is that this morning I was reading the newspaper, the Bangkok Post. They're saying through Bloomberg News that the liquidity squeeze in Asia is the highest since 2008. So would it be possible that your funding may be squeezed in Asia? I don't know, probably. Do you have an effect so that maybe you have less funding to fund VCs?
I think I get the point. Is there FOMO in your respective VCs?
I think I can answer that. It's the first question. There's a lot of herd mentality among investors. It doesn't matter whether the VCs, angels, or crypto investors. People are social animals, or there's a herd mentality, FOMO, whatever you want to call it. If some area is not very popular, no one wants to touch it, and suddenly kind of someone discovers it, and then everyone rushes there. That happens in every industry, and it's not predominantly VC or any other category. That's the way it goes. Yeah. In the 60s, it was, or 50s, it was bowling alleys. That was the big thing. That's how you made money, guaranteed.
We should have. Yeah,
it's a fact.
Yeah. Bonnie, liquidity squeeze. The second question that was the second part of the question.
I think.
Do you notice it?
I'm guessing they're referring to fundraising for VCs, and so far we haven't seen. I think the only place we do see a big difference compared to a couple of years ago is money from China, because of the currency control. Yeah. So very difficult to raise USD from Chinese investors these days because of the currency control. But other than that, I think we're small enough of fund. We're not talking about billions of dollars, so it probably doesn't hit us that bad at all.
Maybe same part of the question, sorry, for Thailand as well. Like, is there any liquidity squeeze on the PE level towards VCs?
No.
When the VCs had to fundraise, basically, and pitch?
Actually, no.
No?
Actually, I think, like I told you, I think the money is everywhere.
Okay.
The problem is we need to find the really good startup to invest in. The money is lying there. Like, for example, our good friend Founder startup, they are raising like Fund 2, Fund 3 already. So the other couple of corporate VC, like Bang and things, they have like $50 million US fund. The other big corporate like XCG, our good friend, also set up another like 3 billion Thai baht fund and stuff like that.
There is still money going around.
Yeah, money running around.
Yeah, but on a side note, though, I think if you're thinking of raising money or in the crypto side, it's just also be careful when there are a lot of so-called VCs, like crypto hedge funds. If you raise funds from them, be sure you also do your due diligence, because some of them could just simply be a WeChat group where people literally put your allocation on the WeChat group and people just put crypto in. And what that means is you have actually no idea who's investing in you.
Yeah.
And we see many of those, and those are the ones where they would pull out, as soon as you're liquid.
Wow. What the hell? One more question. We can eat lunch later.
Hey,
Yeah.
I'm from Yellow. Quick question. I've been hearing a lot about dumb investments, smart investments, and then the same thing was echoed here as well. And we talk about the right way of investing or smart investing, but still a lot of the investments from companies like SoftBank, Sequoia, they invest in top-line heavy companies, but negative bottom-line heavy companies. Is that smart investment, number one? And in today's market, when we've learned so much and we've been talking about investing correctly, investing smart, what are the metrics that people look at, the top 5 or top 3, which are considered or constituted as good investments?
Are you a startup?
No, I'm not a startup.
He's a smart investor.
Yeah.
Now, are you an investor or a startup?
No, I'm a incubator.
What?
Incubator, investor,
Okay.
capital fund, everything. all
Just
in one.
wanted to see your perspective. Yeah. Basically, I understand what is your criteria as well. That was one of the
I
questions.
can answer the latter one. I think it's all about numbers, like and volume. So if I have 70 investments, well, I have 70. So for every investment, I think this applies to every VC. Probably VCs look even more of these cases through. So for every investment I make, I see 99 companies that I say no to. So for 70 companies, I said 6,930 times no. Yeah, something like that. So what happens in this process is I would call it pattern recognition. You starting to see, like, if you only look at few cases, you think that you're brilliant when you're finding the massive potential. But when you see hundreds, then you start seeing, like, there are few which are better, they stand out. When you see 1,000, then it starts really, some of the better ones show. And 7,000 or 10,000, I mean, you have 2,000 investments, so you must have seen, I don't know, 20,000 or something more.
So no
And that's
fixed criteria, but just more like a...
I mean,
experience.
I don't know. It's not mystical. It's not intuition in a religious way or anything. But it's just, I would call it pattern recognition. You start saying, like, and of course you spend time with these people. And when you've done investments like 10 years ago, and then you see which one of them are working and which are not, then you start. It's human learning. It's not machine learning.
Yeah, I was about to say, this is the fun when you introduce machine learning into the
It's
discussion.
very, very deep learning, and it's sometimes very painful learning as well.
Money?
And it's definitely very true, right? It's we often internally run Monte Carlo simulations to look at what is the optimal portfolio size for a fund our stage, and the amount of tech risk we have to take on at that stage. Second is every time we run, that's why the part that even though it's very painful to run accelerators, we still run them because they're very good, what we call them baseline setting every half a year. It actually gives us visibility every 6 months as we interview, 400 or 500 companies out of the 2,000 applications to get a sense of every 6 months where are the teams at, where are the founders at, startups at, so that we want to make sure we're also up to date in terms of benchmarking.
Top 3 criteria, 3 words only. Meg and Roland. Top 3 criteria in selecting.
Oh, for impact, for
startups.
investments?
Yeah.
Profitability, impact, sustainability.
Nice.
Badass co-founder team. That's it.
Thank you very much. Give a round of applause to our investors. Talk to them if you need money. They're going to be around. Thank you, guys.